Bitcoin and the alt season, of course, all starting to come together, but maybe not just yet. We'll break it down for you guys. My name is Paul Barrow. Welcome back in the Tech Path. Let's thank our sponsor today, and that is Coinbase. If you're brand new to crypto, this is where you need to start. This is kind of like first base in crypto. Go over to Coinbase.com. You guys can sign up over there, start your own individual trading account. It can hold it there in terms of custody. There's all sorts of advantages over there, and of course, one of the best and most secure places to start your crypto journey. Just use our link down below. It's going to give you $200 in crypto to get started, and you guys can use that to get going. Let's get into a few topics today, and one of the things I want to kind of focus in on is just the state of the market, and also there are some key things that are starting to play out here that could trigger into the market generally of where crypto could be going. Here, of course, is Genevieve, and she's talking about everything really shows no signs of slowing down. Stock market's up, S&P's up, Bitcoin's filing or pressuring its all-time high, and gold, of course, we know is continuing. The U.S. consumer spending, I'm still a little bit concerned about. It is staying strong, but I feel like the credit crunch could continue to put a little pressure on that. Does that really affect most of the markets? I think for people who are investing in this, maybe, maybe not. We'll see how this plays out as we start to let's take a look at some of the inflation numbers and some of the job numbers going into November. And of course, we're expecting a little bit of a break in November as well. Here's the fear and greed. And you can kind of see the fear and greed has really been coming back quite a bit here. Let me kind of zoom in on this for you guys a little bit. You can kind of see the chart here where we had dipped down right here around the 1st of October to around 36. That was pretty significant. And then of course, Bitcoin started moving. A lot of altcoins have been flying. Of course, Solana hitting almost 170. But right there, holding that 63. So we're definitely in the green right now. Not extreme greed, but definitely going toward potentially a market correction overall. Now, many people ask, is this alt season? Not necessarily, but it does look like we are getting to the green zone. Last week we showed this. It was still in kind of the yellow to kind of orange zone, but right now into the green zone, 33. And of course, we've got some time to go. I think we still have a little bit of push before we start to see that. I know that Solana and Avalanche were running over the weekend. There's a few things we'll break down on that to give you guys kind of an understanding there. But first, I want to take a look at gold. Gold's market capitalization now hitting 18.4 trillion. A significant increase in gold. Also, silver is up as well. So be looking at these markets. Since 2019, market valuation has officially doubled. Comes as gold prices surpassed 2750, first time in history, 33% year to date. This sounds like a crypto project right there. And at the same time, Bitcoin's value is now 1.4 trillion or 13 times lower. Gold right now is definitely on track. But could it be that Bitcoin is setting up for an unbelievable run against gold going into it? A lot of people look at that. A couple other things that are looking at right now is some of the directives that are flowing into the ETFs. And when I say directives, I mean, when you think about what is the voting potential here with the presidential election, how is the market going to respond to an interest rate cut? What is the market going to do in terms of jobs and inflation? Bitcoin ETF inflows seem to be pushing it upward. And if you look at some of the points they were getting at, interpreting rising odds over the overtly pro-crypto Donald Trump to win the U.S. presidential election scenario. Let me kind of zoom in on that. Bullish and a little bit more clear crypto policy, which I would agree. Harris has not been able to identify a good, solid crypto policy that has been able to translate to the voters. ETFs are back and strong net flows, registering at 2.1 billion last week. That was the largest since the 2.6 billion generated second week of March. So remember, March through May was when we hit all-time high in Bitcoin. And of course, we saw a lot of altcoins also running with that. So this could be leading into that as we go forward. Now, what they're talking about is this right here. And part of this is the, I would say, well, it's the crypto version of the polls out there. Trump holding a commanding lead right now at 62.6, really growing over a while. What's interesting to me, here's where the split really started, was around late September. But since then, Trump has pretty much separated from Harris and looks to be continuing to increase his lead. And of course, the thing that's really critical is increasing his lead now in the swing states. Arizona up 70-30, Pennsylvania up 59-41, Nevada, which was tight, now 55-45. Michigan was also tight, 15 electoral votes there. So this looks like it could be. Now, many people would say, well, Paul, Polymarket is, it's outside the United States. I'm telling you right now, guys, remember Kalshi and the overturn in a court of law for what the CFTC was trying to do in terms of controlling these markets, the predictive betting markets for elections. That was approved and pretty much said, hey, yeah, you can do that in the United States, to my understanding. So with that being the case, I think we're starting to see a little bit of a shift in tide. And I think a lot of U.S. people are following this, but also the bigger investment community outside the United States, almost as important, because this is an election that will affect everyone. I want to go to a clip real quick. This will get into some details on this. Take a look.
You're a markets guy. What do you think of Polymarket? What do you think of some of the other marketplaces where people are effectively taking bets on this election? And again, what looks like a big move for former President Trump.
Well, let me first say I'm an indirect investor in Polymarket through a fund that I'm in, a crypto fund that I'm in. And I know that you're not supposed to be an American and bet on Polymarket. And so it's not really an indication, I think, of anything. And I don't really know what hedges are out there. So it's possible to, bet on one side and not bet on the other. And from all indications, most of the money coming into Polymarket is foreign money. So I don't think it's an indication of anything.
That was a story today in the Wall Street Journal that somebody's actually dumping $30 million.
It's like betting on the Mets, right? If you put enough money on it, the odds will change.
Well, I think the irony of all of it is a lot of these Republicans are buying it, thinking that that's going to determine the outcome of the election, and they're just gaslighting themselves.
Is that right?
I guess. Because I was looking at it when Tim Walz was up as well, when it was the VP stakes, and you could see it change before.
This is like Republicans are excited. Say, we don't care about the polls or the early voting numbers. Look at what the foreigners are saying.
Yeah. And Putin's amazing. Putin's on his phone going, oh, it's good.
I can pretty much say I don't think Putin's on his phone checking out Polymarket, but I do think that people in the EU and people in Asia are. And of course, the other thing that was a little bit confusing there is that in the clip that kind of butted up to that one where Cuban was talking about Polymarket, I don't understand that he didn't understand what was happening with the Kalshi lawsuit and the CFTC, because that kind of clarified what would happen with predictive betting here in the U.S. So not sure how that plays. If he is just looking at this as saying, well, don't worry about what Polymarket is doing because that makes his candidate look bad, maybe that's an angle that's happening. I don't know. But I think right now, when it gets to be this much of a spread, it's got to seep over into culture. And culture is a big part of this. I cannot see something that is culturally driven being so predictively wrong about where these markets are going. We'll see how this all plays out, though. That's for sure. Another topic right here is Eric Balchunas coming in from Bloomberg. He says, IBIT had one heck of a week. 1.1 billion in new cash, best week since March. We showed that last year, but man, what a run that is for IBIT. Of course, that being BlackRock and their Bitcoin ETF, 26 billion, which is on top it's the top 2% of all ETFs ever. Think about that for a second. Okay, so I want to go into a clip here, and this is Saylor. If you think about where BlackRock is in the current market, a lot of people would look at that and say, well, there's a lot of centralization going on. And Saylor kind of follows up here on this clip talking about basically self-custody and how this may be shifting over to the banks. Take a look.
I think that when the Bitcoin is held by a bunch of crypto anarchists who aren't regulated entities, who don't acknowledge government or don't acknowledge taxes or don't acknowledge reporting requirements, that increases the risk of seizure. So normally, the risk is greater when they're unregulated private entities that are perceived to be holding the asset. When you have regulated public entities like BlackRock and Fidelity and JP Morgan and State Street Bank holding the asset, well, all the lawmakers and all the law enforcement arms, they're invested in those entities. Right? So there's no way that all the senators and all the congressmen are going to seize the assets from Fidelity and BlackRock or Vanguard, because that's where all their retirement money is invested. So the asset moving from private to public hands and moving into regulated entities, it does a bunch of things. It decreases the volatility. It decreases the risk of loss. It decreases the, like, who do you trust more as a custodian, FTX or Fidelity?
So a few points that he's hitting here to kind of unwrap that. First of all, I would think that anybody outside the United States holding Bitcoin, that's their business, so our government has no real bearing on that. But when you look at the typical crypto holder, I would wager that they're holding a small percentage of their net worth, which means probably equal to what they hold in cash. And that essentially can be self-custodied as well. I think where the idea of self-custody is a lot of people are fed up with the fees, with the ability to gain access to banks who are holding your funds, and are trying to shift away from fiat, which is very surprising to hear Saylor say that. And when he talked about, if governments are talking about seizure, they're not going to be seizing BlackRock's Bitcoin because that's not theirs. It's the accounts being held there. Now, sure, there are many, institutional hedge funds, et cetera, that are in there as well. But if you start going into, which you can, individually invest in these, then yes, your account could be eligible for that kind of seizure in scenarios that play out in this. So I'm still a little bit on the fence of self-custody. I think self-custody is the way to go. Now, granted, if you have a lot, then you're more concerned with, security. And I think at that point, yes, you could probably lean into maybe one of these centralized locations, even if it was just an exchange. So we'll see how this plays out. I'm kind of curious how this is going to look if we do start to see less volatility for Bitcoin, how that detaches away from the rest of the market. When you think about that, you have to consider who else could own Bitcoins in terms of large entities. Well, one of them, Saylor talks about, is Apple. Take a look.
Bitcoin is the digital transformation of capital. MicroStrategy is just a business taking advantage of the digital transformation. But if I was talking to Apple, I would say, don't buy back 100 billion of your stock. Buy 100 billion of Bitcoin. It will go to 500 billion. You'll have a $500 billion business growing 20% a year. You'll make 100 billion in investment gains a year. Your investors will look at it and they'll add $1 trillion or $2 trillion to your market cap. And now the company will be valued 60% based upon the operating business, 40% based on the balance sheet, right? And the risk will shift. If the company had $40 billion of tangible assets on the balance sheet, and it was that puts a floor, right, on the equity. And really what you want is you want a well-balanced company where, it's like Harvard University or Yale. They're not valued based upon the earnings of this semester of freshmen entering Harvard. They're valued because they have 18 billion in the endowment.
Listen, Saylor's not wrong there in the sense of how companies are valued and looked at by investors, and he is right because he's obviously living and walking the walk there with MicroStrategy in terms of the valuation of what they've been able to do with Bitcoin. However, there's one thing he doesn't quite put together, and maybe it's just the clips, but he's talking about less volatility, but then he says that it could double, from 1 billion to 500 billion, I think is what he said. That's a lot of volatility, and I think that's what major publicly traded companies are trying to get away from, is the volatility side of things, because a negative volatility, as we all know, and even when Tesla was holding Bitcoin on its balance sheet, if it goes down a little bit, the market looks at that, and of course they're going to respond to it. It's a little different, I think, with MicroStrategy, because your whole premise of how your business is run is built on that. That is a different model. So I don't know how that plays out with a major top 5 company in the globe, especially as a publicly traded one. We'll see. But because of that, there's a lot of other top 5 companies out there that are starting to move on this, and this, of course, is Stripe going in. And we talked a little bit about this last week. 1.1 billion on the largest crypto deal ever. This is getting Bridge, which is another stablecoin product. So it's an acquisition. Signal Stripe's expanding push into crypto services with its recent partnerships on Coinbase, reinstatement of crypto payments via USDC. All of those are going to be huge, I think, going forward. And I think Stripe has finally woken up. Remember, Stripe was in crypto all the way back in 2018, abandoned it, and has now, 2024, have come back out 6 years later. So this could play into a lot of things. Here was a report that I thought was interesting around real-time payments that could boost global GDP by 74% in 5 years. There was a few points I wanted to highlight with some charts. One, 2023 reported contributed 164 billion to GDP, equivalent to about 12 million workers. That's pretty significant. By 2028, this could jump up to around 74% over the next 5 years. Consumers and businesses globally paved about 116 billion in transactions costs in 2023. This figure expected to go to 245. That's almost double, actually. So pretty significant. And if you look at the countries in terms of potential uplift, there's a lot of them here, especially in some of these, not necessarily emerging, because India is probably one of the leading GDP countries out there, but you've got Nigeria in here. Obviously, China will be involved. U.S. still there. Brazil, which is a huge crypto nation. Turkey will also be there as well. This is also getting into where people are talking about the unbanked. 28 countries were in this role as well. So unbanked most likely going to see pretty significant growth as well. Real-time economic impact, you can see India, Brazil, China, looks like BRICS nations, even Mexico, which has been kind of highlighting really one of the areas I think is growing very fast is Mexico and South America. But listen, you have to think about MiCA because that's where most of the advancements are probably going to take place. MiCA, of course, is what's happening in Europe. And this is all going to be pulled down to around these crypto offerings that are built around this new regulatory framework. Let me kind of zoom in on a couple points here. Many consider the continent a less important player. Now the fledgling regulation has introduced a completely new narrative, and that is where Europe is now the new path for crypto rather than trailing behind the US or Asia. And I think that is true. The key here is going to be based on the kind of products and services that are launched here. And I think Coinbase, Robinhood, all of those have started to move. Tether's response, because they're the one that's going to be essentially pushed out, says a statement promising to introduce a technology-based solution to overcome the MiCA compliance challenges. That'll be an interesting play out if that does occur. So a little bit vague, but yet still very interesting. So lots happening here. Stable coins, I think, will be the big key here in the United States if we do get, and I do believe we will get, regulatory framework, and I think that opens things up very big into not only banks, but the financial institutions, as well as the potential for companies to start putting it on their balance sheet. Remember, FASB rules start to shift at the end of this year. That'll change things also for crypto investments. Here's VanEck, Matthew Siegel, talking about the EU enabling staking for Solana. This is going to be a pretty big deal. It's probably why we saw Solana running yesterday and over the weekend, up significantly. So rewards accrue and reinvest daily. Staking rewards also include end of day on the NAV. And then VanEck also says to manage staking exposure to ensure staking daily liquidity. So some pretty big moves there, which will be beneficial, I think, to Solana and probably other tokens out there as we start to see this as well. Listen, we're going to try to get John Deaton on the show this week. Make sure and watch for that. If you guys are not in the Diamond Circle, get in right now. It's a great place to get additional content. It's free. And all you have to do is click the link down below to get started. Follow me on X, @Paul Barron. We'll catch you next time right here on TechPath.